So let's now have a look at the charts, some real trading examples of the ABCD setup. This is a 30-minute chart of the US dollar, Canadian dollar. And in here, you can see that there were heavy volumes in here, selling activity from this place. So this is basically the volume accumulation setup. And let's say that you're looking for some sort of confirmation of this level or of this general zone. Let's say that you are not sure if to take the short from there or not. Alright, so in this case, there's a nice example of the ABCD setup. From this low to this high, let's mark this point A. This swing point will be the B. Now, below the 50% of the Fibonacci, by the way, you can activate the Fibonacci tool by pressing F8 function in your keyboard. So this is the A, this is the B. Now you're looking for C. And in here, this is another significant swing point below the 50% mark. So this will be the C point for you. And what you'll do is you just move the Fibonacci like this. So the beginning of the Fibonacci is at the point C, and it will point you to the point D. This is the point D. So you have A, B, C, D, and from this place, the ABCD setup tells you to go short. All right, and if you look at the volumes, this is generally the same volume area. So this is confirmation of the volume setup. In this case, it works really nicely, as you can see. So this is basically a nice scenario of how you can use the ABCD setup as a confirmation to some volume-based setup. Of course, as I said, you don't need to use it as a confirmation. You also can use it as a standalone setup. So let's move a bit forward and let me show you some more examples of the ABCD setups. Now let me show you one important thing. Those are significant swing points, A, B, and now you're looking for a pullback which is above the 50% line. So in this case, this setup would be invalid because this pullback didn't go past the 50%. If it did, then it would be ABCD setup. You would go like this, and you would go long from here. There would be the D, all right? But because the pullback doesn't reach past the 50%, it's not valid setup and you don't trade it. All right. Now let's have a look at here. Point A, point B, significant swing points. Now here is the 50% mark. The price touches it, so it is a valid setup. So this is the point C, and what you do is you grab the Fibonacci tool and you move it so it begins in the point C, like this. So from B to C and from C to D, this is the D, and from here you go long. All right, A, B, C, D, and from this point you go long. Now here's another one. This is A, and this is B. Now we want point C above the 50% mark. This is the 50% mark. So from A to B, then the swing point above 50% is in here. This is the C. And now you move the profile, so it begins at C. And this will be the zone to go long from this zone right here. And what you can also notice, it's a confluence of the volume profile with this level. This is the volume accumulation setup. Volumes accumulated before strong buying activity. As you can see, heaviest volumes are in here, which matches with the ABCD setup. Alright, so that's nice confluence, nice confirmation of this volume-based setup. You have the point A, point B, this is the point C, and this line, this will be the D. So when the price hits it, you go long, so it's in here. Now, in here, we have A, B, C, this is above the 50% mark. So this point is the C. So again, you move the Fibonacci like this. So it begins at C, and this will be the D. So you have A, B, B, C, and C, D. And from this place, you go long. Now, what I see here is the volume accumulation setup. In here, heaviest volumes being here. And let's say that you are looking for some confirmation of this level, alright? So let's have a look if we can find the ABCD confirmation in here. So here are nice swing points. In here, swing point A, swing point B, above the 50%, there's swing point C, it is in here, this is a swing point. So again, you move the Fibonacci tool like this, and it shows this level, and this is the D. So when the price hits the D level, you go long. A, B, B, C, C, D, and from D you go long. As you can see, it corresponds with the volume-based level in here. What you can also do, you can use more ABCD setups. So in this case, there's another one. This is A, this is B, above 50%. Is the C, and this line is the D. When the price hits it, it's the point D. So you go from A to B, B to C, and C to D, and from D you go long. From this level. Now here is another example of the ABCD setup. This point being A, this point being B. Above 50% line, there is the C. So you move the Fibonacci, and when the price hits this level, you go long. In this case, it would be a losing trade. From A to B, B to C, C to D. From D you go long. This time it didn't work. There is no strategy with 100% accuracy, so it doesn't really matter. As long as your winning ratio is above like 55 or 60%, you should be fine. Now here's another one. Point A, point B. Now you are looking for a pullback below 50%. This is the 50%. So the lowest point is in here. It doesn't go past A. If it did, then it would be invalid, but it's above A and below 50%. So this is the point C. Again, you move the tool like this, and this will be the D line. This will be the resistance you're looking for. So A, B, C, D. Here the price hits the level and you go short. A, B, C, D. Now what's next is another ABCD setup in here. This swing point is A, this one is B, this one will be C, and in here where the price hits this level, it will be the D, and you will go long from there. Alright? A, B, C, D, and a long. Now in this case there seems to be nice ABCD setup, but there is a macro news. This candle is a macro candle and you don't want to be trading when there is macro news. So unfortunately this time it would be invalid, but let me show you. So you see the setup. This is A, this is B. This point, this swing point is above the 50%, so it is the C. You move the tool and you should go long from there. A, B, C, D. But there was the macro news, so there's no trade from there. Alright? Now let's have a look at the last one on this pair. This is significant swing point. This will be point A. Then this one would be point B, because it's the highest of all those swing points, alright? So there would be A, there to B. I need to move the chart a bit like this. So from A to B, then below 50%, the lowest swing point is this one, so this will be the point C. Move it like this, and from C, this will be the D. This is the line for D. So when the price hits this level, you go short. Alright, so you have A, B, C, D, and short from there. As you can see, I'm using the ABCD setup over large areas as well as over smaller areas. It works all the same, but make in mind that you need to see those significant swing points like these, alright? So it doesn't really matter if those are big swing points or just the smaller ones, but they need to be clearly visible, like in this case. Those are very nice swing points. As you can see, the reaction was very spot on. Let's now move on to another market to show you how it works on another forex pair. The next one will be the euro-dollar. It's my most favorite trading pair. The ABCD setup works on this pair very nicely. Of course, you can also use it on any pair or any trading instrument you like to, but it works better on some trading instruments, worse on some other trading instruments. Over long term, I had very nice results with it on the euro-dollar. So let me show you how very nicely it works there. So this is the euro-dollar 30-minute chart. Let's make it a bit faster this time, since you already know the setup and how to apply it. So let's start at the beginning of the chart, which I've loaded here. is February 2019. In here, there's a nice moving activity from this point to this point. Then the price makes it back to this point. This is the lowest swing point from this area. So this will be the A, this will be the B, this will be the C. So now you move the tool like this, and this will be the short. So you wait for the price to hit this level. This will be the D, and from there you go short. A, B, C, D, short. Now another one is very close. Let me zoom it a bit for you so you can see better. A, B, below 50% is C, and this line is at a D. I'm not sure if the price actually hit the level. Maybe it would be a missing trade. Yeah, it seems like the price missed the level. Next one is also very close. A, B, below 50% goes the C, and this is the D. You go short from there. So you have A, B, C, D, short. Another one which I see is in here, point A, point B, then there goes point C, and this line is the D. From A to B, from B to C, from C to D, in here the price just missed the level, alright? This wouldn't be a valid trade because the price turned a little bit sooner. Afterwards it hit the level, there was a reaction to it, but I would discard the level because it seems like it got tested right here. An important thing here is that if you use this as a confirmation, then it doesn't really need to be that precise, you know. You can consider this zone like a resistance zone, which could be like 4 or 5 pips wide, alright? You can use this as a confirmation, not just a single level with exact value, alright? So you can use this like a resistance zone. If there's any trading signal within this resistance zone, you take it. Another one, a pretty big one, is in here. This is A. From A you go to B. If this was higher than this one, then the B would be this one, alright? But because this one is higher than this one, then you consider this swing point as the swing point B, alright? Now there's point C in here, below 50%. So it's in here, and now we move the Fibonacci tool like this, so it begins at C, and this line is the D. Or as I said before, general area is the resistance zone. In this case, you can see that it missed the exact level, which was in here. The price missed the level, but if you use this like a general zone, and if there, for example, was another trading level which you were looking for example in here, for example some volume-based level, then it would be best to take it right there at this place and make the ABCD setup just as a confirmation of the general zone. Alright, that's how I use the ABCD setup. I use the exact level from the volumes, from volume-based setups, but as for the confirmation is concerned, I just use the general area. So if my trading level is somewhere in the general area, somewhere close, then I consider it a confirmation. Another case of the ABCD setup is in here. This is A. This is B. From B, you go to C, which is above the 50% line. You move the tool like this, and this will be the level to go long from. So A, B, C, and here would be the D. Oh wait, I didn't notice this high. Oh yeah, this would invalidate the setup. So this actually wouldn't be the ABCD setup as I would use it, because this went past the whole AC area. So I just didn't notice this area. If the price just went from here to here, like this, A, B, C, D, then you would go long there. But because of this, the setup is invalid in here. Alright, sorry about that. But looking at the chart, I see another one. This one is a small one, but still it's a valid one. This is A, this is B, this is point C, so A, B, C, and from C you go to D, this is D, and from there you go short. If you measure the distance, then this is 10 pip distance, which is actually my standard profit target for the euro dollar. This is just 10 pips. Now here's another one. A, B. Now you go to C, which is in here, the lower swing point, not this one, but this one. So you go A, B, C. You move the profile like this, not the profile, I mean the Fibonacci tool, and from here you go short. This time I think that it wouldn't work. This is just a 6 pip movement, so the price would go past the level. This one would end up as a losing trade. Alright, this is the point D. From D you go short, but the price makes only 6 pips and then returns, goes upwards and into a stop loss. So this one would be a losing trade. Now in here, there's another one. It's a tight one. Those swing points are pretty close to each other. This is A, this is B, this is swing point C, another significant swing point above the 50% line. So this is the C. So let's move the Fibonacci tool like this, and from C, this is the D line, exactly in here. Alright, so when the price hits the level, this is the point D, and you go long from there. So A, B, C, D, and long. Now here's a funny one, because the swing point is actually the market open, a little bit above the 50% line. So this is the point A, this is the point B, this is the point C in here. And this is the place you go long from when the price hits the level. So from A to B to C to D. This is the D line. You go long from there. Almost 20 pip movement. Now there are some crazy sell-off. I don't think that we'll see any ABCD setup in here. But I do see one in here. This is point A, this is point B, this is point C, and this will be the D. So we have A, B, C, D. When the price hits this level, you go long. Nice wave-like movement, all right? Let me check in here. Unfortunately, the price didn't make it to the 50%, so this would be the A, this would be the B. And I wanted to have C here, but the price turned a bit before it, so in this case, the ABCD setup would be invalid, all right? So let's check this one out. Those swing points, swing point A, swing point B, it seems that the price didn't quite reach the 50% mark in here. Let me make sure, but I think it didn't. It didn't. Price didn't go past the 50% mark. So A, B, this would be C, but it's not. But it's very close actually, so maybe I would just consider it as a valid touch of the 50%. It's just like 0.1 or 0.2 pips. So let's just have a look at it, how it will end up, all right? A, B, C. From C, we go to D, which would be in here. Actually, yeah, there would be a reaction in here. And if you are trading bigger trades with wider take profit and stop loss, then there would be this movement for you, this reaction. So yeah, this time it would work, even though the price didn't actually hit the 50% mark. Oh, here's another one, nice wave-like movement. It's this one. This is the point A. This is the point B. Then here is the point C, exactly at the 50% mark. And here is the D line. So you go A, B, C, D, and short from there. All right. Another nice reaction. And actually there's another one very close to it. It's this one. This is the A. This is the B. Now this is the C. This is the D. So A, B, C, D, and from there you go short. By the way, there is macro news. This candle is macro news. You definitely don't want to be trading during the macro news, so you absolutely want to quit your trade before this candle starts to form, alright? Before the macro news. This is the FOMC news, strongest news concerning the US dollar. So let me show you one more example before we wrap it up. Now here I see a big one, swing point A. Here is swing point B. So this one is A, this one is B. Then below the 50% there is a swing point C. So you move the Fibonacci tool like this, so it begins at C. So you have A, B, C, and this line, when the price hits it, you go short in here. Very nice reaction. All right, so we went from A to B to C to D and short from there. All right, so that's it. That's how you use the ABCD setup. It's a very nice confirmation setup. One of my favorite confirmation setups. It's just based on price action and trading psychology. You don't need any extra indicators, just the standard Fibonacci tool, which is part of every trading software. So it's a very useful setup. Even if you don't really like trading volumes, you can as well just use the Fibonacci and trade with it like this. Alright, so that's about it, and I'll see you in the next video.